So how doable is all of this? We've got former Goldman Sachs senior partner Peter Kiernan, market analyst Christine Short, independent women's forums Jillian Melchior. All right, Peter, to you on those goals. Still doable? I mean, in the timeline, still feasible?
Well, the market is always a battle between sentiment and valuation, right? And right now, I think what's going on is some people are really questioning the timetable. I always felt that August was ambitious, but that sometime in the fall was reasonable. We'll see. The market is not great at valuing these kinds of delays, but it doesn't feel good, particularly when one phrase that I thought was sort of losing its steam has regained energy, and that's neutrality in terms of the impact on the taxes. That worries me.
What if it is pushed back beyond this year? Some are even saying, and Christine, the first thing we're going to see is people realizing tax cuts maybe don't happen this year. If it's pushed to next year, I can't see it happening next year. Maybe that's what the market is fearing, but what do you think?
Yeah, I mean, that's what you're seeing in futures today. It's interesting to me that it took this and it took this long to actually see investors kind of back up a bit and say, you know, show that there are actually risks out there. I mean, look at the VIX. For the last 2 weeks, we've been seeing it at all-time lows. Today, we're finally seeing a spike in the fear index. So it shows that investors they're not going to wait around for this forever. Mnuchin already said, look, he's backed up from the August timeline. There's sort of a hopefully by the end of the year. I think the longer this takes, the more investors are going to expect out of a tax reform package. But we know healthcare reform has to happen first so that we have the capital to back that tax reform.
They're not giving up on it. I mean, Jillian, it's right, but we do know Gary Cohn and Treasury Secretary Mnuchin are on Capitol Hill as we speak.
Yep.
We heard from Speaker Paul Ryan, who says it's kind of full steam ahead, I'm paraphrasing here, with an agenda they still think is doable. But let's say you can get that sort of thing through the House, getting it through the Senate might be a whole nother battle right now.
Absolutely, and with the political drama that's been unfolding, I think that further complicates it. Look, we're dealing with a president that's done really well on the things where he can act unilaterally, appointing a Supreme Court justice, environmental regulation, like he said, but on the things where he
unilaterally, but he has to
work with other people, and that's where this has fallen apart. I think this is a president who's going to be judged more so on the results that he delivers than almost any other president. Right now, we're seeing him over-promising and under-delivering. I think that's really a difficult thing for the GOP to rally around.
You know, we were mentioning, Peter, also about the run-up in the markets prior to this, certainly post the election, that this could be the anomaly, that maybe this reaction and this fears that he's in trouble or his agenda is in trouble is what's overdone. What do you think?
Well, I hope that's the case, because when you see stocks, bonds, and the dollar all going down at the same time, that means that correlations have gone out the window. I actually take some comfort from that, because it means that everybody in every market is sort of saying, this doesn't look very pretty. The fact is that the market is no good at delivering votes of no confidence. They don't really value collusion. They don't really value a parsing through of obstruction of justice. So once the market gets away from that kind of negative sentiment, they'll turn to more classic valuations. They'll look, for example, at what an astonishingly strong collar we had. This quarter involved not just great earnings, but revenue growth of approaching 8%.
But does it justify this market at these levels?
Well, I think the people who call this price to perfection 22, 23 times, that feels pretty lofty. I think you'd have to really grit hard.
Even now with this beating down today?
1%. We're down 1%. Right. This is nothing. If you really look at the scheme of things.
So you can kind of humor us.
Thank you. But the point is that in the scheme of things, down 1% is not too punishing. There are many days where we've been down more than that in the past.
Very true.
But the fact is, we are just at the early innings of trying to figure out how dire this is. And I take some comfort from the fact that everybody is bailing. That tells me that we may hit some point of inflection where people say, I've capitulated. I don't think we're there yet, but I like the...
But I was telling, Peter and I were talking in the green room before the show, and one of the things I said, I don't know how you guys feel, that an equally, if not even more telling factor for the markets, I thought, were comments that Mitch McConnell, the Senate leader, had said, like yesterday, about whatever we do on tax cuts, they better be revenue neutral. And that changed a perception that, you know, President Trump had famously told the economists, you got to prime the pump, you've got to go ahead and goose the economy before you see the revenues for that. And here's the leader of the Senate saying, no, right out the gate, these better be revenue neutral, which by definition means they're not going to be maybe substantial tax cuts, right? Am I interpreting that?
Yeah, and look, I think you brought up a great point about we've had a great earnings season. It's provided a really wonderful
Peter brought up a great point, but I
right. I meant Peter. I glanced over at him, but you brought up plenty of great points too, Neil. But earnings season's been a great distraction. You know, bottom line's grown about 13%. That's the best growth number we've seen since 2011. And so, look, markets really do trade on earnings. They get bogged down by some of this news, though, and I think it's important to pay attention to the fundamentals. Back half of the year is looking very strong as well. We're expecting 10% growth.
So maybe you don't need these big old tax cuts.
But the corporations have kind of, you know, are banking on these, even though we're seeing strength.
J.B. Diamond certainly wants. His comments today seem to indicate that.
Want this. They've been expecting it. They've been putting this into their guidance. Yes, we're seeing stronger numbers because the year ago numbers weren't great, so there's an easier year-over-year comparison there. But it'd be interesting for me to see if corporations and analysts alike draw down their estimates for the back half of 2017 off of this.
Yeah, I think you're interesting because the issue is that revenue neutrality almost recreates a math problem that you can't solve. If you look at what the impact, for instance, of lowering the corporate tax rate to 15%, that's going to be $400 billion a year of economic growth that has to come from somewhere. I don't see that kind of growth on the horizon. So if that is the hostage that they're going to take, is revenue neutrality in terms of taxes.
You don't subscribe to that.
I don't think you can do anything near 15% corporate tax rates and anything near some of the individual tax rates we're talking about if we're going to be held hostage to what the CBO is going to determine is revenue neutrality. That just doesn't seem to work.
By definition, it's a tame tax cut. Maybe warrants it if the deficit's, if that's your view and you're worried. But that would mean that the secret weapon that we're talking about here that would help corporations might not.
Well, I am actually kind of glad that we're bringing this up. That I do think that cutting government spending is really important. And I'm saying this as a millennial. Tax cuts now are great. But if we don't cut spending, I know that as I age, I'm going to be hit with an enormous bill colliding into me. That's not reassuring to me as a young voter.
Well, I'll dodge it, so I don't find it too objectionable.
All right, fair enough. But yeah, I'm glad that that's coming up right now. I thought it was interesting in his speech that he was saying these are going to be the biggest tax cuts ever if we get what we want. But that's a big if.
Yeah,